But welcome everybody to today's webinar. My name is Thomas Wood. I am the Director of Trading Operations and a partner here at Basecamp Trading. And today we are going to be talking about the fundamentals of momentum trading. So some good stuff. I always try to make sure I teach everybody something whenever we have one of these free webinars for you. So make sure you're here through the whole thing. I will be sure and answer questions at the end and throughout, as well as try to make sure I explain everything good enough that you can take it and run with it and use the information you learned tonight tomorrow. So without further ado, we have to go through the risk disclaimers really quick before we can get to the good stuff. So trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and provided for the sole purpose of education and assistance making independent investment decisions. BasecampTrading.com is taking reasonable measures to ensure the accuracy of the information contained herein. However, BasecampTrading.com does not guarantee its accuracy and is not liable for any loss or damage may result directly or indirectly from such content from an inability to access such information or a delay in or failure of the transmission or receipt of instruction or notification in connection therewith. Any past performance results shown for illustration and example only are hypothetical and as such have many inherent limitations. No representation is being made that the account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. You know what's kind of funny is I can actually recite that whole thing now without reading it. So we're also required to show you CFTC Rule 4.41. This is essentially just a hypothetical disclaimer saying, look, if we're showing you examples from the past, obviously there's no guarantee that it's going to happen again in the future because we can't predict the future. But that being said, I don't teach anything I'm not willing to put money on myself. We trade every day in the trading rooms in front of hundreds of people, and you guys see the strategies working. So let me introduce myself. This is me, my beautiful wife, Dora, and my only kid, Merlin, wearing a little hat. One thing I get a lot when people see who I am is they go, wow, Thomas, you are really young. I never would have pictured you as that old. And I will give it to you. Yeah, I'm relatively young, relatively speaking, but I've been trading since I was 13 or 14 years old when my dad first got me started. And I've already spent more time trading real money than most people will in a lifetime. To the world's most famous trading pooch. And one of the reasons I got into this industry in the first place, one of the reasons I came in, and instead of just trading for a living, I decided I wanted to get into trading education and actually helping other people, is because there's this opinion or this view about Wall Street and about trading that, oh, it's super secretive, it's really hard. You have to have gone to an Ivy League school and be the smartest person in the world in order to understand how these work and in order to make money. And in my opinion, that's not necessarily true. And when my dad first started trading, he lost hundreds of thousands of dollars trying to follow quote unquote gurus out there. And in my opinion, I just didn't think that was right, because there were people that didn't really trade and didn't really know what they were doing. And they were trying to teach other people what to do. So I wanted to be the exception to the rule and actually help people. And if you hang on to the end of the webinar, I'll show you a bunch of different equity curves of different traders I've worked with, showing how well they're doing. And this is just some of them, but I've got some new ones for those of you that have seen any of the other webinars I've done. That's one of the main reasons I actually got into this in the first place. So I have a question for you. What do you think you need the most help with in your trading? Okay. Entries, stop placement or management, or exits. If you look back at your trading, you go, all right, there's one place I need to improve. If there's one thing you need to improve on the most, what do you need the most help with? All of them. Management, stop placement, exits, stops, exits, entries, 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 and exits, entries, 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 exits. Sorry, there's tons of them coming through. Entries, 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 stop placement, exits, entries, exits. Discipline, absolutely. Discipline's a big one. Entries and exits, entries and exits. Wolf to my dog, by the way. Nowhere to enter. Entries, all of them. Yeah. Let me tell you a story about Dave. Dave Glissmeyer, which many of you, if you are a member and you're in the Slack chat room, you see Dave in there talking all the time. But when he first became a member of Basecamp Trading, this was about a year and a half ago or so. He's somebody now that I would consider a friend, but at the time I didn't know him from Adam, as the saying goes, or whatever. But Dave's equity curve used to be kind of a 1 step forward, 2 steps backwards, downward slope, going from upper left to lower right, which is the exact opposite way that you want it to be going. And he said, look, I've studied trading more than anything else in my life. All right. I've never failed at anything I set my mind to. I literally built a multi-million-dollar business from the ground up on credit cards, but trading is really vexing me because it seems like the harder I try, the worse I do. How many of you can relate to that? How many of you, when you get done trading at the end of the day or at the end of the week or the end of the year, you have an equity curve that looks like this? Yes, me, absolutely. That's me. Yep. And I'm not saying this just to beat you up. There's a reason behind everything I'm showing you. But this is from a guy named Sam. And I'll show you who Sam is here in a little bit. I'll show you what his equity curve looks like now. But how many of you have an equity curve that looks like this? You start off really good. You go, wow, this trading thing is not that hard. And then you start getting these losses that kick in. These losses kick in. And then all of a sudden, it's just nothing but losing. And you go all the way back down to zero. All right. How does it make you feel when you look at your equity curve at the end of the year, or the end of the day, or end of the month, and you see this is what's happening? And what is it costing you? Maybe lack of success is costing you family time, freedom, causing you emotional or financial stress. Now, when does it get to the point where you go, you know what? I'm ready to make a change. It's one of those pivotal moments where I'm done trading like this. I'm done having my future look like this. And it's time to turn. It's time to change. I want you to ask yourself that question. Now, one thing I always teach people here with any of the workshops I do, and whenever you're in the trading room with me, we always talk about the way to profitability is a balancing act. It's a balance between reward risk and percentage win. Yeah, Fred, this is for options as well. So if you can get that balance between your reward risk ratio and the percentage win, that's how you get to the point where you are a profitable trader. All right, now what is reward risk? Well, reward risk is simply, let's say on your average winning trade, you have $200 profit. On your average losing trade, you have a $100 loss. That means your reward risk ratio is 2 to 1. Okay, so you make twice as much on your winning trades, and then as you lose on your losing trades. Okay, now your percent win, that's pretty obvious. It's just how often you're winning. And these numbers can vary greatly because I'm not here to tell you there's only one way to trade. And one of the things we teach everybody at Basecamp Trading is, look, there's a lot of different ways to profitability. I'm going to show you equity curves from traders that are making money, real money, trading lots of different strategies, and you'll be able to tell that they're different because their equity curves all look different. But what you have to do is you have to design a plan and come up with a strategy that fits your trading personality. Because if your strategy doesn't fit your trading personality, you're not going to end up being a profitable trader. You're not going to follow your rules. Okay, so let me tell you a little bit about what we do with Basecamp. All right, and many of you have seen this before, but let's review anyway. Instead of taking you and saying, here's a workshop, here's an indicator or whatever it is, and selling it to you and saying, good luck, go have fun, and dropping you off on the side of the mountain and saying, we'll see you later. We try to push people through a series of steps. Okay, and the first step is Basecamp, and that is acclimation. That is the beginning level courses. And that's going to teach you, when you first get your membership, you're going to get acclimation as well. And what acclimation does is it teaches you the fundamentals, the basics of price management or price action, the basics of risk management, how to manage your emotions. Okay. Then what we're going to do is we're going to take you into the ascent. And today we're going to be talking about the ascent and what is the ascent. The ascent is what we call peak trader development. All right, and peak trader development is the next step. So we're going to start teaching you strategies. We're going to get you the tools you need. We're going to teach you the strategies, teach you how to read the charts, how to decide where entries and exits are, teach you a number of different ways to trade with futures, options, equities, ETFs, etc. So you can start going, okay, this one fits my personality, and this one fits my personality, and this one fits my personality. All right, and then we take you on to Everest, and Everest is when you go, all right, I have all these tools I need. I've decided the way I want to trade. Let's put together a trading plan that fits my personality, that works for me. All right. Now, how many of you, my next question for you is, how many of you are missing winning trades? Or how many of you are losing money because you're taking too many trades that you shouldn't be taking? So how many of you are going, I'm taking way too many trades, or I'm not taking enough trades because I'm too scared to get into the market? And you look back at the end of the day and you go, should have been in there, should have been in there, should have been in there, shouldn't have been in there. And how many of you believe that you're trading at your full potential? That you're trading as good as you possibly can be trading? And nobody should say yes, because the markets are always changing and you're always learning. You need to become a student of the markets. I'm not even trading at my full potential. Okay. So what's it costing you to not be at nearly your full potential? What are these missed opportunities costing you in your everyday life? Well, let's talk about what we're going to discuss today. What are you going to learn in today's presentation? You're going to learn the correct way to read the MQ momentum indicator. You're going to learn understanding overall momentum bias and how you look at a market and go, okay, I'm bullish this market. The strength of the market is rising. The strength of the market is weakening. We're going to talk about knowing when there is strength going into breakouts so you can minimize false breakouts. And we're going to talk about the fundamentals of divergences, knowing when markets are topping and bottoming. So when are these markets getting ready to have these turning points? All right, now we're going to cover all this, and you should be able to take this and apply it to your trading right away. If you don't have the MQ momentum indicator, you can use it with an MACD. You read it the same way. It just looks a little bit different. Okay, and we're going to cover all this today, but we realize, and you need to realize, that real change only comes from long-term commitment, from actually stepping back and going, let's fix the problem, fixing the problem, getting a plan, getting a strategy together, and then moving forward. One mistake I see a lot of traders making is they start trading, they start off okay, they start losing money, and then they just pile on. And when they pile on, they just accelerate the rate at which they're losing money. Okay, and we don't want to be doing that. So we're trying to take a step back, dry dock the ship to fix it, and then putting it back out in the ocean, or then starting to trade again. Alrighty? So let's go ahead and dive right in. So there's a couple different parts to the MQ momentum, or MACD, if you don't have the MQ momentum indicator. All right, there's both fast and slow indicator lines. You use them to identify the overall momentum trend. Okay, the indicator lines are used to say, all right, the strength of this market is rising, the strength of the market is selling off. We also use it to identify divergences. All right. The next part is the histograms. And the histograms are showing the spread between the fast and the slow indicator lines. All right. The histograms are telling us the strength of a rally or of a sell-off. So if a market rallies up with a lot of strength, with a lot of very large histograms, that's a very strong push higher. Okay, if the market sells off with a lot of downside histograms, or a very strong, steep downside histograms, there's a lot of strength behind that sell-off. All right, if they sell off with a lot of price action moving down, but the histograms barely move, then there's not a lot of momentum behind it. I like to compare it to being pushed with just a little shove, or being hit by a truck. There's a big difference between the two, right? Okay, it's also, the histograms also help you with identifying momentum pivots for divergences. Yes, sir, Mike, it is. We also use it to identify when there's bull and bear flag setups. All right, so let's take a look at what the MQ momentum looks like. And again, MACD can be read in a similar manner. It has a different algorithm. It's going to look different, but it operates the same and you can read it the same, if that makes sense. All right. So the indicator lines are right here. We have the fast line, which is the white line, and the slow line, which is the light blue line. All right. When the fast line crosses below the slow line, we're going to have red histograms. When the fast line crosses above the slow line, like here, you're going to get green histograms. All right. Now, again, how far up or how far down those red and green histograms push, that's telling us how strong the move is. So, for example, we look at this rally here. Oops, it's right over here. That rally there does not have a lot of upside strength looking at the histograms. This rally back here has a whole lot of upside strength. Is that making sense? This sell-off, lots of downside strength. This sell-off, lots of downside strength. This sell-off, lots of downside strength. This one here, not really any downside strength. Okay. Now, there's no way that we can look at a market and say, this market is going to have a strong move up or a strong move down, because we can't predict the future. All right. But what we can do is we can look at where we are compared to where we've been, and then we can make predictions from there. And I'll talk about that here in just a minute with divergences. Okay. Now, when we are reading the indicator lines, or when we're looking at this, we never want to just blindly look at momentum indicators or indicator lines or the histograms, and we never want to just blindly look at the momentum indicator and ignore the price action. It's always a combination of price action and momentum. Okay? MQ momentum is a lot more sensitive than MACD. That's one of the differences. So when we look at a trend, for those of you that haven't learned what the definition of a price action trend is, a downtrend is lower high, lower low pivots like this. Okay, so if we're looking at the price action here, we're going lower highs, lower lows. That's a downtrend. All right, an uptrend is higher high, higher low pivots like that. So when we look at this, we go low, high, low, high, low, high. Those are higher lows and higher highs. So that's in an uptrend. We read the indicator line the exact same way. Okay. So when we look at this momentum, we go, here's a high, here's a low, here's a lower high, and a lower low, and a lower high, and a lower low, lower high, lower low, and then we start putting in higher lows and higher highs here. Okay, so momentum is trending down all the way over until about this point here, and then momentum starts trending back up. Is that making sense? Everybody understand? And again, there's a lot of questions coming through. I'll be answering most of them at the end. I'll try to pick off a few every once in a while as we go, though. So I used to use MACD before I had MQ momentum. All right. However, I prefer MQ momentum, to be quite honest with you. But when I used MACD, I would use it just some default settings. Okay. Now, when we're looking at the strength of the moves as well, we don't want to just look at the trend on the indicator line, although the indicator line is what's showing us the momentum trend, right? We also want to look at the histograms to see how strong rallies and sell-offs are. Because if we see a market that's trending higher in price action, but then we start seeing those rallies weaken, like you do right here, compared to the last set of histograms, we say, all right, well, this rally is a lot weaker than the last rally, so we're losing strength. That means we're probably not going to follow through all that much on this rally. Okay? And we see that downside strength is increasing. We're increasing downside, and our upside strength is continuing to decrease. That means we're going to expect this market to continue to push lower. Make sense? So we're saying the rallies have the buyers have no strength when they come in and start pushing prices higher. The sellers, they're continuing to gain momentum, gain strength as they continue to push prices lower. Now, when we start looking at this, we go, okay, well, now our buyers are starting to strengthen, but our indicator line is still weak. Okay, and then buyers coming in even stronger, and now our indicator line is changing. Now we're going, okay, momentum trend is shifting. Buying strength is picking up. Sell-off strength or seller strength is weakening. Then we look for the rally back up. All right. Let's take another couple examples here. This is Apple on a daily price chart. Now, the other thing is, everything I'm teaching you today about reading momentum, it applies to any time frame you're looking at and any market you're looking at. You do it, you read it the exact same way. These are universal principles for reading momentum. All right, so let's continue on. This is Apple on a daily. We can see our strength, very, very strong. Indicator line and upside histogram strength, very, very strong through here. And then we start picking up more downside strength than we did upside strength. And that's when we get this retracement. Okay. And then we pick right back up. We break through the high here with momentum, and that causes this little rally. And then once more, we start losing strength there. Okay, you see the second bounce right there. You barely had any upside strength at all. That was this right here. And then we sell off from there. Then our sellers had a lot of strength here, very little strength here, and our indicator line shifted here as well back to a bullish. And that happened right here. Okay, and then we just go straight up from there. Upside strength continues to grow, downside strength continues to weaken, and the market continues to climb. Is that making sense? Everybody understanding now how you're reading that momentum, what we're looking at, how we're reading the histograms to determine whether or not the upswings and downstrings have a lot of power behind them or a lot of force behind them, and looking at the indicator line itself to determine whether or not the trend of the momentum is moving higher or lower. We're not looking at momentum, or we're not looking at volume. No. It's a proprietary algorithm. All right, so here's another example. This is bonds on a 500 tick. If you've ever been with me in the trading room, you know my favorite time frame for bonds is a 500 tick chart. So we kind of have neutral to weakening momentum through here, okay, because our upside strength, weaker, 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 all right? And then downside strength increasing, and we get these sell-offs here as the market continues to trend lower. Then our momentum takes a giant shift, all right? And momentum histograms pick up quite a bit compared to the last set of histograms. And our indicator line starts to strengthen quite a bit as well. And that's when we get this market starting to run away. Then we come up here, weakening, weakening. We pull back, go into consolidation, break out to new highs with strengthening momentum, and momentum continues to strengthen all the way up through here until you get right up to the top. And then what happens? It turns around and starts coming back down. So if we look at this, here is a quiz for you. Let's see how well you've been paying attention, because it's different looking at it in the past compared to looking at it in the future. So this chart, looking at the right-hand side of the chart right here, where's the momentum strength? Momentum is declining, weakening, negative, weakening, coming down, 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 sideways to down, downside, downside, weakening, coming down. So I don't care what indicators you have bought in the past, but buy momentum. It will pay for itself 1,000 times over. Thanks, Gary. Declining, down, going down, weak, going down, down, sideways, lower high, down, balanced, going down. This is bearish. Okay? Good job, everybody. 99% of you got it right. Why is this bearish? Well, we had a high up here, and then our indicator lines put in a lower high right here, right? And look at our upside strength. A lot of strength here, no strength here, even though prices are pushing to a higher high. So what happens here? That was this point right there. That's where we were looking at. So yeah, we did push up a little bit higher, and momentum weakened even more. And then we rolled over, and momentum stayed bearish the entire down move there. You guys see how bearish this indicator line is coming down? See how bearish the histograms are? We didn't even have any. Whenever it bounced, there was not even any green histograms. So there were no buying strength. There was no buying strength behind those rallies. Make sense? So let's keep on moving on. Let's talk a little bit about divergences. So that's the fundamentals, the basics of reading the momentum bias, going, okay, this market is bullish or this market is bearish. All right. But with divergences, we're saying this market should be topping or this market should be bottoming. Okay. So we're looking for it to turn and move the opposite direction. Now, when we are looking at divergences, we want to not only reference the MQ momentum indicator, but we also want to look at price action. Okay, again, we are always comparing momentum to the price chart. Are they agreeing or are they disagreeing? Now, a divergence occurs when you have a discrepancy between the indicator line and the price action, where the indicator is not confirming what the price chart itself is doing. All right, now just because we have a divergence, this is one misconception that happens a lot, does not mean that the market is going to completely reverse trend. All right, a divergence does not mean this has to change and go the opposite direction. It does tell us when a market is trying to continue in the direction it was initially moving, but it's losing strength. So it doesn't have the strength that it had initially. This also tells us when to trail our stops, tells us when to close trades, or we can look at it on a daily, for example, or a 240 minute and say, all right, we have a bearish divergence, so we look for this market to pull down on shorter time frames. So it'll give us directional bias. Now, why do we want to use divergences? Why do we want to look for these? Why are they good? Why am I teaching you this? Well, divergences can do a few different things. They can keep us from entering the wrong direction at market tops and bottoms. And I cannot tell you the thousands of times it has done that for me. I'll look at saying, okay, this market's looking like it's breaking out. And I'll go, momentum's, I'm going long into a bearish divergence. We don't want to do that. We're going short into a bullish divergence. I don't want to do that. They can help increase the probabilities of a trade. So when momentum is on your side, in my opinion, whenever momentum is on your side, it increases the probabilities of having success. Okay. They can get us in at the start of a move and increase the potential profits. So instead of waiting until that move has already taken place and jumping in and trying to chase it, it tells you kind of when it's getting ready to set up and start to take off. Again, they can give us directional bias, and they help us know when it's time to actually close a trade. So let's say I'm long and we start getting a bearish divergence. That's going to tell me, hey, Thomas, take a step back. Time to take some profits. We'll wait for another opportunity. All right, so what does a divergence look like? Well, again, what we're going to look for is if price chart's coming down, let's do this. If this is the price chart up here and it comes down, bounces up, and then comes down again, okay? So we have two pivots, pivot number 1 and pivot number 2. And at the bottom is our momentum indicator. Our momentum indicator will have the indicator lines have gone like this and then back up, and they'll be way over here. So even though price is almost equal, the indicator line is going to be much higher. Also, the histograms will normally have gone bearish, bullish, and they'll be up here. So they were very bearish histograms at first, and they were not so bearish on the second sell-off. Make sense? So momentum is strengthening while price is weakening. And again, we're looking at two pivots, one in relation to the one that happened right before it. All right, so here's that example. This is the Russell. Oops. And here's going to be pivot low number 1, pivot low number 2. You see that? How price came down, bounced back up, and then came down again. Okay. Now, when we look at that, we're going to say, all right, that initial down move was all of this right here. The second pivot was right here. You see the significant difference. Does that make sense? So that's telling us if we were short when our momentum changed up here, when we had this consolidation breakout to the downside. So if we had gone short here on a consolidation breakout with our stop at the high, and this runs down and we see this bullish divergence, it tells us to get out of our short and save ourselves this retracement. Okay, or if we are a counter trend trader, like I said before, it depends on your personality, the way you want to trade. Some people like going counter trend. They look for markets to get extended and then go the opposite direction. Well, this is a great tool, in my opinion, or one of the best ways you can possibly trade counter trend. Wait for the divergence, go long here, catch this rally here. Okay, now the exact opposite happened up here. We're going to have high number 1, and we're going to have high number 2. Okay, we're going to look at our momentum. High number 1, high number 2. Everybody see how the indicator line was weakening? See the significant weakening in 2 sets of histograms? And again, we're comparing one entire set of histograms to the next entire set of histograms. Then what happens? We turn around and we start to sell off. Momentum continues to pick up in our direction, and we continue to accelerate lower. This is Russell on 2 minute. Let's take a look. This is Apple on a 5 minute. Now, those were the counter trend divergences. So the market was moving higher, then divergence and pulled back and went the opposite direction. Then bullish divergence and pulled back and went back up the opposite direction. Okay. Now, we can also trade and use divergences to tell us when it's time to get back in the direction of the initial move. So in this case, Apple is obviously trending higher. And we're going to wait for momentum divergence. When does that happen? Well, this is going to become low number 1. This is low number 2. Look at the difference in the indicator line. Number 1, number 2. See how we're strengthening between the 2 lows? Same thing for the histograms. Strengthening between the 2 lows. So that tells us, okay, time to start looking to get long. We'd be going long right around here. Let's stop at the low. Looking for this little pop right there. But again, now we're using divergences to time entries into the direction of the trend. Make sense? Here's another example. This is Google. This is on a 30-minute price chart. No, I can't do that right now. Here's high number 1. Here's high number 2. Let's look at the strength here. Number 1, number 2. You see how obvious that bearish divergence is? You see how our downside histograms are strengthening? So the downswings are picking up more momentum compared to previous downside histograms. See how our upside strength is weakening? Then what happens? We turn and sell off through the floor. Everybody following along so far? Pretty simple concept, but very important. Now, you're probably going, well, Thomas, there was a bearish divergence right before that, right? Yes. High number 1, high number 2. Okay. Now, what's the difference between this bearish divergence, number 1 here, and bearish divergence number 2 here with these 2 peaks? Who can tell me? There's 2 different things I'm looking for here. Strong downside momentum in a second. First one has less downside momentum. Not as well defined. Flat. White, same level in number 1. Strength is picking up on the second one. Still higher low, lower momentum, downside of histograms, much weaker. Number 2, price action, no return, running stops, clear sign of weakness. Red histograms getting greater. There you go. All of those. So 1, much more well-defined weakness in the indicator line. Huge difference on the second divergence, not so much on the first divergence. 2, on the first divergence, our downside strength was actually weakening. We went from a lot more downside strength back here compared to where we were there, compared to where we were here. So downside strength was weakening. On the second one, downside strength was strengthening. Upside strength was weakening. You guys see the difference now? So indicator line, much more well-defined. Histograms, more downside strength on the second sell-off. All right? Now, let's take a look at the current price chart. Here's your quiz. See how well you're paying attention. Momentum right now. Where's the momentum right now? I'm throwing you a curveball. I'll give you a hint. I'm throwing you a curveball. Flat, declining, flat, 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 sideways, upside, flat, flat, sideways to up, flattening, going lower. No momentum, flat, 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 weakening, 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 flat. I can tell who's been in workshops with me previously. Momentum is neutral. Now, why is momentum neutral, and why haven't I talked about it before? This is what we call neutral leaning bearish. Okay, why is it neutral? Because we're basically moving sideways. However, it's leaning bearish because we are slightly weaker and our upside strength is slightly weaker. The rally, this rally here is weaker than this sell-off was, and this rally is also weaker than the last rally, which was weaker than the rally before that, which was weaker than the rally before that. So it's neutral momentum, leaning bearish. So what does that mean? That means we need to see the price action confirm it. How do we have the price action confirm it? Price action needs to come down and break through the pivot low before we'd want to get into it. So here's our pivot low. We can look to sell down below it. Make sense? Like I switched it up there on you? So what's this market end up looking like? This is how it ends up playing out. There's that support break. So we're not selling anywhere over here. We'd be selling here, or on the last kiss right there. Okay, makes sense. Now, on the last kiss, down there is the ideal place to sell. Why? Because now we have definitely well-defined bearish momentum. Price action has changed. We now put in a lower high and a lower low. So we're actually in a downtrend by that point as well. All right. Make sense? So, who feels like they have learned something so far tonight? Who feels like this is helping you? Aye, yes, 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 yes. Me, always. Yes, always. Perfect. Good stuff. Excellent. I am glad to hear it. Now, remember I told you I'd show you some equity curves of traders that have gone through the program and seen everything we have and learned how to trade on themselves. This is Dave. This is Dave Glissmeyer. Remember I told you his story earlier? One you guys always talk to, if you're a member, talk to in Slack in the chat room. This is Dave's equity curve, and it is a whole lot better than this now. He's like, what, 5-10 times more profit than what he has here? Because this is from last July. This is almost a year ago. He is doing excellent. I'm very, very proud of him. This is Dave right here. And he is doing great. And one of the things he said is, look, I was losing money. I was subscribed to 50 different quote unquote gurus out there. I was placing 30 to 40 trades a day. And I went through the Summit framework, and now I'm placing 2 or 3 trades a day at the most. And my equity curve has never looked better. Took a lot of pressure off his shoulders, helped him to trade better. Now, how many of you are ready to take the next step and go, all right, this is making sense. I want to see what you got. I want to see how I can do that too. Well, we have peak trader development coming up. Okay. And you can get peak trader development tonight and start watching it tonight and come in on Monday when I'm back in the trading room, when I get back from this quarterly meeting, and take it by storm. Okay. Peak Trader is the most comprehensive training we have ever done. It's roughly 12 hours of training in 3 different sessions. It's by both Dave Aquino and myself. It also is going to come with the MQ Momentum Indicator, value charts, and value bars. We don't like sitting there going, hey, look, guys, come get this training. Oh, now that you've learned this, you have to go buy these indicators in order to use it. No. We say, look, we're going to give you the training. We're going to give you the indicators for free. Okay. In session 1, you're going to learn price action trading and options fundamentals. In session 2, momentum trading and options strategies. In session 3, you're going to get multi-time frame analysis and advanced trading strategies. Now, let me break that down for you a little bit more. And then I'm going to show you some more equity curves from more of the traders. Like I said, I got some new ones that you'll want to see, I think. In part 1, you're going to have price action trends, consolidation breakouts, candlestick patterns, trade entry, trade management, reversal patterns, directional options trades. Part 2, you're going to get momentum, read momentum, identifying divergences, trading counter-trend with divergences, bull and bear flag setups, momentum inflections, momentum breakouts, big fish options, unusual options. And then in part 3, you're going to get multi-time frame analysis, understanding drill down correlation between time frames, pyramiding and winning positions, hedging strategies for options, hedging strategies for futures, credit spread trading, managing credit spread positions, and intraday scalping with options. It is a ton of training. All right, if you want this, you can get the value charts indicator, the MQ momentum indicator, the value bars indicator, and peak trader development, all for $897. You're getting all of that for $897. Okay, all you got to do is go to bctnow.com/peak. Again, just go to bctnow.com/peak. If you need help, shoot us an email at support@basecamptrading.com, or you can give us a call. We got people standby. Actually, I think Dave's there talking to people now. 801-889-2699. Now, let me tell you what some of our members are saying. All right, there's no gray area. It is either there's a setup or there is not a setup. Very straightforward approach to trading. It makes it simple. I've been in a lot of different rooms and a lot of different sites over the last 4 years. This is the first one that I've stayed in because of understanding not just what is being done here, but also the way things are presented. We try to make it different. If you haven't ever been in the trading rooms with us, we try to make the trading rooms different. It's not just come in and blindly follow Thomas or Dave. It's come in and learn why these trades are taking place, why these setups are happening, so you can learn to decide when to place trades for yourself. Now, here's a new equity curve that I haven't shown anybody yet. I actually got this one just a couple hours ago. This is from Andres. He is doing incredibly well. This is just over the past couple of months. Beautiful, beautiful equity curve. And he's mostly focusing on intermediate term pairs trades, but that fits his style. Again, it's all about putting together a strategy and a plan that works for you. Okay, that you want to follow because it fits your personality. And we walk you through how to do that within the first step, which is acclimation, and the second step, which is peak. Okay, this is from David. David just sent me this, and this is David's. All he does is trade bonds. And David was on the verge of quitting. He says, guys, I don't understand. I want to quit. I'm done. We said, give it one more try. Let's explain something to you. Dave Glissmeyer got on the phone with him and said, hey, look, this is how it works. This is where it's gone. Looking really, really good. This is Lori's. All right, this is Lori's equity curve, and her equity curve is beautiful. And she trades a different way as well. She trades a style that fits her personality. Okay, it's all about coming up with the strategy. You learn the strategies, and you take those strategies and say, okay, I'm going to use them this way. All right, the next one, this is Sam. Remember I showed you Sam's equity curve at the beginning? This is his new Forex equity curve that he sent me. And this is futures down here. Beautiful. I mean, these are excellent equity curves. And the thing is everybody thinks trading is so hard, but it's not. It's all about patience, the discipline, and the risk management. If you have patience, discipline, and risk management, in my opinion, you can be profitable. Okay. Now, again, if you want to get all this training, all you got to do is go to bctnow.com/peak. This is going to give you the entire peak trader development workshop. bctnow.com/peak. If you have questions, shoot us an email, support@basecamptrading.com, or you can give us a call, 801-889-2699. Does the MQ momentum indicator work with TOS? Yeah, the indicators work on TradeStation, Thinkorswim, eSignal, Multicharts, Sierra/Infinity, and NinjaTrader. So they're on most of the platforms out there. Here, let me go back up. I'll show you what all is in Peak. Again, Peak is covering a whole lot of stuff here. Peak is going over. It's about 12 hours. Again, it's about 12 hours of training separated into 3 different sections. And each of those sections have subsections. Okay. It comes with MQ momentum and value charts and value bars, those 3 indicators. So you have everything you need so you can take what you learn and start applying it to your trading right away. We talk about price action trading and options fundamentals in section 1. Section 2 is momentum trading and option strategies. Section 3 is multi-time frame analysis and advanced trading strategies. It's not on CTrader, no, Brian. What we'll do is, if you don't have acclimation, if you buy it, so let's do it this way. If you purchase Peak tonight and shoot us an email at support, we'll give you acclimation for free. So we'll also give you acclimation in here as well. Does it work on Fidelity? No, it's not on Fidelity ATP. The indicators aren't. Everything else, though, you can apply to your trading on Fidelity. What are value charts? Value charts are a patented algorithm that we created that plot price in terms of value, showing you when markets are extended either significantly over or significantly undervalued relative to previous price history. Brian, shoot us an email or give us a call. I'm sure we can. Oh, yeah. I guess I added this up wrong. I apologize. It's about a $1,500 value. There we go. Again, bctnow.com/peak. Yeah, if you get it tonight, we'll give you acclimation as well. Mike, shoot us an email. I'm sure we can get something. Acclimation. So acclimation, this is the second step in the series, okay? Acclimation is teaching you the fundamentals of risk management. It's teaching you how to put together a trading plan, how to put together a trading log, teaching you how to fix your psychology, because having the right mindset is a huge part of being a profitable trader and being successful. No, Michael, the trading room is not included in the deal. But shoot us an email. How about if you are not a member? If you're not a member, just go to basecamptrading.com/go and you can get a $7 trial. Yeah, when you go to bctnow.com/peak, go to bctnow.com/peak, that's going to bring you to this page right here. All you have to do is fill out your information. First name, last name, email. Make sure you put in the right email because that's where you're going to get the indicators and everything delivered to you. Fill out your billing information and place your order. Okay. And then you will be good to go. Like I said, you can start watching it tonight, but it's about 12 hours of training. So it's going to take you a couple days. And the most successful students that we've worked with, they go back and they watch the training that they have 6, 7, 8 times over. And they just take it piece by piece and they make notes and they take it piece by piece and they trade simulated until they get to the point where they're making money consistently simulated, and then they switch to live. Now, all the mentorship students, all those equity curves I was showing you, those are all people that have now gone through it. And they are going, all right, I'm now ready to move on, trade live. They're trading live, and they send me their results and say, look how well I'm doing. No problem, Michael. No, Keith, it has not. I'm not sure if we're going to end up doing that. I think we are, but I'm not. Don't quote me on that. Apparently it's changing, or maybe changing. It's one of the things we'll be discussing in Dallas. So again, bctnow.com/peak. Remember how we talked about, are you ready to take that next step? What's it going to take for you to actually decide that enough is enough? You want to change the way you're trading, and it's time to make a difference? Here's the opportunity. You've seen the results people are getting. Do you think that they're any better than you? I don't. That's one thing I always say is, look, trading is not that complicated. If you can be disciplined, if you can be focused, if you can be patient and learn the stuff, you can be profitable too, in my opinion. And there are thousands of traders that are doing it. Okay? That's one of the biggest secrets Wall Street has, is that you can't manage your own money. You got to give it to somebody else. No. You can learn how to do it yourself. Stop paying all those fees. Does the indicators work with tick charts as well? Yes, Cesar, they work with tick charts also. Yeah, bctnow.com/peak, or you can call us on the phone, 801-889-2699. If you can't get through on the phone, you can keep calling, or you can give us a call back tomorrow or the day after. Also, if you can't get through and you still need help, you can't get the website to work or something, shoot us an email, support@basecamptrading.com. Men can set up a time to get on the phone with you and walk you through how to do it, or even run it manually if you need to. Evelina, you said, if you want to start from the beginning of momentum turning, how do we know whether momentum will continue or reverse? I often find momentum just reverses right after you enter. So do not try getting in at the exact top or the exact bottom. Even with divergences, we don't try to enter at the exact top or the exact bottom. Always let the market have a second to prove to you that it's going to start moving your direction. Make it say, look, I'm starting to turn, then you jump in. It's okay if you don't get in at the exact top. If you get in 10 ticks late, that's fine. It's better than getting in and having it continue and not be a good trade setup after you've already entered it. Okay? Mike, no, I will not, but on Saturday, I'll be putting out the weekly outlook video on Saturday, so after I get back. I believe Dave will still be doing the end of day setups, though, when he is in Dallas. All right, so again, thank you all for coming out. I hope you enjoyed it. Hopefully you learned something. I look forward to seeing you in the trading room. Look forward to seeing you in the membership. The other thing I'll tell you to do is, when you join, make sure you get into Slack and you can talk to other traders that are doing really well. All these people that I'm sending you, showing you their equity curves, they're in Slack, and you can talk to them and say, hey, how's it going? Is that true? And they'll say, yeah, and show it to you. And a lot of times they'll be calling out their trades in Slack saying, hey, I'm getting in this market. Hey, I'm getting in that market. So you get not only ideas from us, you get ideas from everybody else. You get to learn from other traders that are in the trenches, so to speak. The Peak workshop is on demand. So this has all already been recorded. So you're going to get access to the recordings. This is paying to get access to the recordings so you can get the training. That's why I said you can start watching it tonight. And so like I said, it's about 12 hours. I would definitely encourage you to watch it multiple times. Don't just go watch it once, think you got everything, and then go start trading. Be patient. Take time. It can be very, very rewarding. If you learn how to trade, it can be one of the most rewarding things you do. But don't be in a hurry. The trading room is $147 a month. And that gets you access to futures trading room and options trading room And it gets you access to the end-of-day videos and the free members webinars and everything else like that. So that is it, everybody. I hope you enjoyed it. I hope you enjoy Peak. I'm looking forward to hearing your success story and seeing you be the next person that says, hey, Thomas, here's my equity curve. You want to use it? And I'll say, absolutely. Thanks a lot. We appreciate it. Because it's always encouraging to see other traders that are actually doing it, that are actually being successful in their trading. And yeah, we try to keep everything pretty affordable. I mean, there's a lot of educators out there that tries to charge you thousands and tens of thousands of dollars to learn how to trade. And we said, no, look, if we're actually trying to make a difference, we need to keep the price lower. That's why we're doing that. Can I show the outline of the content again? Sure. So here is session 1. Price action trends, identifying consolidation and breakouts, candlestick patterns, trade entries, trade management, reversal patterns, directional options trades. Part 2 is reading momentum trends, identifying and trading divergences. So when do you get in? Where does your stop go? How do you trail your stop? Where do you exit? Counter trend trading, bull and bear flags, momentum inflections, trading momentum breakouts, big fish options, unusual options. And then part 3 is getting into a little bit more advanced stuff. So it's increasing success using multiple time frames. It's understanding drill down and correlation between time frames, pyramiding on winning trades, options hedging, futures hedging, credit spreads, managing credit spreads. So minimizing your risk, because credit spreads are known as being risky. And there's ways you can minimize your risk by managing them correctly. And intraday scalping. You're getting all that. Like I said, it's about 12 hours of training. Just bctnow.com/peak. Al, shoot us an email. This will also get you into acclimation. This is Ascent. So this will give you acclimation and Ascent, and Everest is different. Everest is when we do mentorships or one-on-ones or small groups. So they're on an individual basis. It's not a recording because it's more tailored towards how do you want to personally trade. So thank you all again. Hope you enjoyed it. Look forward to seeing your very bright trading futures. And until next time, happy trading, everyone.